Welcome to this weekly installment of the Whitaker-Myers Wealth Managers, What We Learned in the Markets This Week. My name is Summit Puri, and thank you for tuning in. 2025 is right around the corner. And if one of your goals for 2025 is financial freedom or getting your finances in order, our team at Whitaker-Myers Wealth Managers would be happy to assist. Please reach out to our advisors, coaches, or financial planners to walk with you on your journey. So let's hop into today's discussion. This episode will be shorter than most as we had a short week with the holidays in the middle of the week. As mentioned, we're approaching the beginning of 2025. We'll make sure to do a full year-end review in the first episode of next year. For the last and final installment of this year's What We Learned in the Markets, we'll focus on our first bullet point, which is the market recap and the key market indicators. Now, on to point number one, the market recap. First, each week we review the Atlanta Fed seasonally adjusted GDP Now report to gauge in real time how fast our economy is growing. This week, the Atlanta GDP Now report shows a healthy 3.1% growth as of December 24th, which is the same as projected last week. Next, each week we look at the initial claims for unemployment insurance for a gauge into the front end of our labor market. This week, initial claims data fell by 2,000 claims, ending at 219,000, while continuing claims rose to 1.91 million. Next, we are watching mortgage rates closely to see how home affordability is trending. This week, we saw a slight uptick in the 30-year and 15-year mortgage rates, ending at 6.85% and 6.00%, respectively. Next, we normally look at investor sentiment, specifically the bull-to-bear spread. Due to a short week, we didn't get an update on the bull-to-bear spread data, leaving the metric at 9.29%, which is the same as last week. Next, we will continue to update you all on the Fed rate cut probabilities based on future contracts. Currently, the CME FedWatch tool is calculating a 11.2% probability of a 0.25% decrease and an 88.8% probability of no decrease in January. And finally, let's take a look at how the markets ended. Last week, the S&P 500, which is our proxy for growth and growth in income, but only when considered together, ended negative 0.04%. The Russell 2000, which tracks small and mid-sized companies or aggressive growth in our Dave Ramsey vernacular, was positive 0.33%. And the MSCI EAFE, which tracks international stocks of developed countries across the globe, excluding the US, was positive 1.46%. International stocks took the win this week. Remember, we watch these market and sector fluctuations weekly to show you in near real time not only how the markets are performing, but the importance of diversification. Nearly every week we have a new leader. Appropriate diversification decreases your risk while exposing you to the upside. If you'd like an unbiased review of your portfolio, don't hesitate to connect with one of our advisors today. And that, friends, concludes our discussion for this week. Thank you once again for tuning in. If you find this information helpful and informative, please take a moment to hit that like button below. By hitting that like button, you help push our content out to other viewers and listeners all across our social media outlets. If you'd like to see our latest videos on your feed, including new content released by our team, make sure to subscribe below. Also, if you'd like to meet with any of our financial coaches or advisors, please click on the link in the description below to schedule a meeting. Thank you again for watching. We look forward to seeing you next week.